Ceasefire hopes collapse as Iran rejects peace plan, sending oil and fear surging today. Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street. The S&P 500 dropped 1.7% to close near 6,500, the Nasdaq tumbled 2.4% to 21,400, and the Dow Jones plunged 470 points to finish around 46,000. The Magnificent Seven mostly suffered terrible losses today, with Meta tanking nearly 8%, Nvidia dropping 4%, Alphabet losing 3%, Amazon falling 2%, and Microsoft sliding 1.4%, while Apple managed a tiny gain of 0.2%. The energy sector was the big winner today as oil spiked, while technology, real estate, and utilities took heavy losses. Bitcoin fell 2% to roughly $69,100, gold dropped over 3% to $4,430 an ounce, silver plunged nearly 6% to $68, but West Texas Intermediate crude oil jumped 3% to over $93 a barrel. Hopes for a Middle East ceasefire collapsed after Iran rejected a 15-point peace proposal from the United States, demanding control over the Strait of Hormuz. This geopolitical standoff immediately paralyzed global shipping lanes and sent crude oil prices soaring, which crushed the broader stock market today as investors panicked over a renewed wave of energy-driven inflation. Additionally, Meta and Alphabet were found liable in a landmark social media addiction trial by a Los Angeles jury, with Meta also announcing fresh layoffs. This unprecedented legal blow directly triggered the massive sell-offs in Meta and Alphabet shares today, dragging the entire technology sector and the Nasdaq index down with them. The 10-year Treasury yield climbed to 4.4%, the 10 to 2-year yield curve spread hit 31 basis points, the US dollar index rose to nearly 100, and the VIX volatility index spiked 8% to 27. These surging yields and a stronger dollar reflect a flight to safety, punishing growth stocks and gold while cementing fears of sticky inflation. The CNN Fear and Greed Index sank to 19, landing deep in extreme fear territory, signaling profound market distress and a massive rotation out of risk assets. 6 of the 7 indicators used by the index are currently flashing extreme fear, reflecting widespread bearishness among traders. The market outlook remains highly volatile and bearish as investors face a resilience trap, where strong labor data prevents the Federal Reserve from cutting rates even as energy shocks threaten economic growth. Continuing jobless claims just dropped to their lowest level since May 2024, giving the central bank room to wait on any policy shifts. Looking ahead to the next 7 days, global markets are bracing for a massive data crunch. Germany will release its inflation data and Japan reports Tokyo consumer prices on Monday. Then, all eyes turn to the critical United States March job market report and the ISM services data releasing next Friday, which poses massive headline risk since it drops while markets are closed for the Good Friday holiday. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.